Interest rates, that seems to be the hot topic these days. Are they going up? Are they going down? What are going on with interest rates? I'm Justin Woodall with Woodall Realty Group. Today I want to talk to you about just that, mortgage rates and interest rates, rates on loans. And so I want to talk about two different scenarios there. So one we keep hearing about is the Fed keeps raising the Fed funds rate. So what that is the rate that banks transfer money back and forth. That's kind of the baseline for the banks. That is not directly tied to mortgage rates. But they do kind of flow together. So both the Fed funds rate is up right now and mortgage rates are up right now. So mortgage rates really is what we're concerned about in the real estate space. So mortgage rates are not directly tied to the Fed funds rate. Mortgage rates really are tied more to the 10-year Treasury bond, and it kind of flows along with that. And the mortgage rates really adjust based on the actions and the activities of what the Fed is doing. And so because the Fed is raising rates, that's typically not great news for the economy, going to slow things down. And because that's not great news, that's what makes the mortgage rates rise. So if we get some good news at some point, we may see rates settle back down. But that's kind of where the rates track based on what the expectations are into the future. They're trying to read into the future. So rates right now, as of the time of this, and they're almost changing weekly, it seems. They'll go up, they'll come back down a little bit, then they'll go up again. And right now they're in the kind of upper sixes, mid to upper sixes is kind of what we're seeing. I think they've in some cases they're bumping up on 7, the last couple days. So some people are projecting that they may go up to 8. Maybe they do, maybe they don't. But what does that mean for you as a consumer? And that's what I want to get down to. So a couple things to mention there. Obviously, if you're renting right now, owning a home and fixing your payment is still a better scenario. Even if it's a higher interest rate, if it's an affordable payment for you, then that payment does not change. You get in a 30-year fixed rate loan, that payment's never going to change. Rents, if you look historically, have always gone up. So if you lease this year, chances are next year your rent's going to be more. If you buy a house this year, rates might be higher, they might be lower. Doesn't matter for you, your payment's going to stay the same next year and the next and the next. Now, if rates do go down, and this is what it seems like most of all the gurus and all the economists can agree on, is that mortgage rates will be lower within a couple of years. So say you buy a house today and the rates are lower in 2 years, then at that time, it's easy enough as calling your mortgage lender up and refinancing that loan, and at that point you can drop your payment down lower. So as long as you can afford the payment today, as long as it makes sense, even at the higher rates, then I would say it's better to own a home than it is to rent a home. And there's 4 reasons for that. One is that you have control over your home. You don't have to ask if you can change out the flooring. You don't have to ask if you can paint a room. You own it. You control the abode that you live in. Number 2, there's tax benefits when you own a home. The interest is tax deductible. If you work out of your house, sometimes there's a home office deduction. So I would say defer to your accountant and your CPA, whoever prepares your taxes for that. But there are tax advantages to owning a home that you don't get whenever you rent. Number 3, and we've already kind of talked about this, your payment is fixed. It does not drop. It does not go up. It may drop if you end up refinancing, but your principal and interest on a 30-year fixed rate loan is going to be fixed for the next 30 years. I can promise you your rent will be more in 30 years or 20 years or 10 years or 5 years than it is today. But your payment on your house will not go up unless you refinance into a higher rate, which at that point is your own decision. And the 4th one is every time you make a payment on that mortgage, the balance that you owe, the debt that you owe goes down a little bit. Every single month it drops a little bit. And in a few years it's down, a few more years it's down even more. So you're gaining equity. And when you get ready to sell that house, the difference in what you owe and what you sell it for goes into your pocket or goes into the next deal. That is not something you get whenever you rent. So there's still advantages, even in a higher interest rate environment. There's advantages to owning a home, and there's advantages to having a fixed payment. The other benefit to buying right now in today's market that you could not do 6 months or a year ago is because rates have gone up a little bit, we've seen prices level out. We've seen less demand. And yes, the payment for a $300,000 house is higher now than it was 6 months ago. But because of that, we've seen the demand has decreased. We've seen some buyers leave the market or go into other price points. And because of that, as a buyer now, you can make offers and you're not competing. You're not competing with the cash offer. So if you're FHA or VA or even a conventional loan, you're not competing with the cash buyers. You're not competing with 6 or 7 other offers. You may be the only offer that seller has. And if you are, you may also be able to negotiate off the price a little bit or negotiate some closing costs. So that's the advantage to buying a house today that the folks that bought earlier this year did not have. And they were actually having to pay above list price, get in bidding wars, pay more for the property. The benefit you have, you can negotiate it now. If rates do decrease in 2 years, which it seems like all the economists and gurus agree on, if the rate does decrease, then you refinance that loan and then you're able to reduce your payment at that time. So for a couple of years, you may have a little higher payment, then you reduce it and you're able to save into the future. The last thing I want to talk about in this video is there are some programs out there right now. We've got some lenders that will do this where we basically do what's called a 2-1 buy down. So what that means is we negotiate for the seller to actually buy down your rate for the first couple of years. So if you're convinced that in 2 years rates are going to be lower, I don't like my payment at 6.5, but I do like it at 4.5, then we can actually negotiate for the seller to buy down your rate on your behalf, and we got lenders that'll do it. So you actually have a 4.5% your first year, 5.5% your second year, and then third year on, it's at 6.5, which is where the rate would be today, hypothetically. Now you have to qualify at 6.5, but you're able to save money those first 2 years, and if rates do decrease in the next couple of years, then you refinance back to 4.5 or 5 or 4 or wherever they are at that time, and you're able to save money through that time. So that's just another thing to think about, and another thing that we're able to offer here at Woodall Realty Group. So long video on rates, but there's ways to navigate this tumultuous market that we're in. We're the experts in the space. We know how to help you get what you need. Reach out to us if there's anything we can do to help you.